Good evening, I am Ibrahim Sani and you're watching Market Talk. Insuretech aims to be the leading digital insurance provider for the country. Here to discuss more is the Group CEO of Insuretech Group, Razman Hafiz Abu Zarim. Welcome to the show, Cik Razman.
Good evening, Ryan. Thank you.
So the buzzword for 2017 is, at least in the insurance world, is Insuretech, which is a subset of Fintech. And a lot of discussions have been held on Fintech. Let's discuss a little bit about Insuretech.
Yes. Well, as you know, as you mentioned quite rightly, it's an offshoot of Fintech. And this is really the evolvement of the digital technology into the space of everyday business in the world. And there are not many industries left in the world that are not touched by digital. And I think insurance is one of those remaining, which is relatively still intact in the traditional method of doing business. So it offers a ripe opportunity for people with leading digital technology to see how they can actually introduce technology to do insurance business better.
You're touching on two actually clear or blue sky industries. Not only is it not touched the most in terms of digital, the insurance business, but Malaysians in general are not as insured or underinsured compared to other markets.
Right.
Does this mean that the growth prospects for this business is actually sky high?
Right. We can just backtrack a bit. When you say touched, I didn't actually mean untouched completely. I mean disrupted, actually. This is a word that they've been using when they change the industry, like the ride-sharing industry, for example. So that's what I meant by untouched in that front. Yes, the two aspects there. I think Malaysia and this region as a whole is relatively underinsured when you look at the more developed economies. For example, in Japan, I think it's more than 100%, close to 150%, I believe. So that implies that people tend to take more than one policy for insurance, whereas in this region, it's still around 50-60% mark, so it's still relatively low. So that obviously, in just numbers terms, offers a great opportunity for growth.
And of course, with the recent appointment of your new deputy group CEO, Iskandar Zahuddin, a person that is quite familiar with the fintech industry, people in the fintech sector actually knows him as a technology guy rather than an insurance guy. Does this signal the clearest of terms in terms of Insuretech heading in that direction?
I hope so, because if you remember, you recall, and we listed about 5 years ago, the value proposition to the market was exactly that. You remember that one of our main contributors to our bottom line would be the travel insurance with our significant airline partners to offer travel insurance products when people buy the ticket. For example, our largest airline partner, AirAsia, so when you buy an AirAsia ticket, you'll be buying the insurance digitally as well, online. So we did say we'd be using digital technology to see how we can digitize the rest of the products within the insurance industry. And so that we've been doing that for some time. We've been looking at various ways of doing this. I've also mentioned before that digital to us does not just mean the ability to offer products online. Digital means using digital technology to do our business better, faster, clearer. And one of the things that we feel this technology will enable us to do is to make the products that we offer to the public much clearer and simpler. Because there has been criticism in the past that insurance products tends to be overly complex. So with digital technology and the instantaneous nature of it, we can strive to make our products a lot simpler and clearer, as we've done on trying to do and continue to do with our travel products.
The consumer perspective is that the simpler the policy, the easier for them to understand it, and the better for them to actually buy that particular product. But as a provider, what I'm trying to assess and understand is that Insuretech goes beyond providing stuff online. It also tries to understand the data gathering. I'm trying to make sense of the various data points, particularly unstructured data, and try to understand the risk management better in terms of risk profiling your customers.
Indeed.
Is this part of the plan, or are you guys already doing it?
We are. We already, well, we started 5 years ago.
Yeah.
And it is a long process. Technology is evolving all the time. And you're right. The idea of actually bringing simpler and clearer products is actually requires a lot of work in analyzing data. So there's a lot of data mining work that has been going on in the last 5 years for us, both internally as well as working with Insuretech companies and companies that offer analytical and telematics services.
All right.
For example, we recently embarked on a pilot study for our motor policy holders, where we attached and installed a device in their motor vehicles over a period of 3 months. And this will then allow the telematics company to assess their driving patterns and behavior. So we've gathered this data over a 3-month period, and currently we're analyzing this data to see how we can better offer our motor product to our customers, and as we're offering the right policy to the right person at the right price.
Okay, and of course this is a novel idea that is being rolled out in your industry. Maybank Etiqa has rolled out telematics with some truck providers, fleet providers, including Scania, UD Trucks, Volvo Trucks, and the likes. And according to them, they are now able to actually price in properly the risk associated with that kind of clients. And this also takes in another point of interest, because if you install some form of telematics in my personal vehicle, there would be no incentive for me to let you as an insurer know how good or bad a driver I am. But if you're a fleet owner, you would have all the interest. You would want to know whether your fleet is being driven properly by the various drivers that you have in your fleet management. Does this mean that this business or this industry will set to take off more in the commercial sector rather than in the individual sector?
Yes, I think that would be the starting point. But just to perhaps go back to what you said about the individual and your personal circumstance, currently there's one price fits all in a category. So but if we understand your driving pattern, if you're a good driver, the premium should reflect that. So we would hope that because you're a better driver, you'll be paying a less premium, ceteris paribus with everything else, say someone who doesn't drive as well as you do. So that would be the incentive.
Okay. Still, I mean, it would be like a double-edged sword, because I would think that I'm a good driver, you know, but with a device right now in my car, it turns out that I'm a poor driver, and that would hit on my premium. Do you think that that kind of, I don't know, simplistic way of looking at things will actually change over time? Consumers will then become a little bit smarter.
I think it will, because it has already changed in places, in more developed economies. This is the case, actually.
All right, Encik Razman, we'll take a short break, but when we come back, we'll discuss a little bit more about Insuretech. Don't go anywhere. Thank you. Welcome back to Market Talk. I'm your host, Ibrahim Sani. Today with me is Razman Hafiz Abu Zarim, the Group CEO of Insuretech. Razman, we were discussing a little bit about the performance of or the direction of your company. Let's talk a little bit about 2017. The idea of having a strong second customer or a strong second pillar is actually essential for any businesses to have. For you, your primary business pillar would be on the travel insurance. Do you have a strong second business pillar to support that very over-leveraged business of yours in the travel insurance?
Well, indeed, as you quite rightly pointed out, the main contributor to our bottom line is our travel insurance business. But in top line, gross written premiums figures, it only represents about 30% of the total general insurance business that we do. As you know, we have interest in a general insurance entity here in Malaysia as well as in Thailand. And there they offer the full suite of general insurance. So it covers motor, fire, commercial fire, and health, medical and health, foreign worker compensation coverage, and so on. So yes, we do cover the whole thing, but I suppose the whole portfolio of general insurance is our second pillar, but we like to be known as the travel insurer because that was relatively unknown before we came onto the market 5 years ago. Travel insurance, very difficult to find statistics, even today, because it tends to be lumbered under a much bigger description of personal accident, PA, and accident and health categories. So it's very difficult to identify. But given the numbers that we've been hitting, we do believe that we are probably the largest travel insurer in this region.
So let's talk about the numbers that you're hitting. Right now, your revenue is increasing year on year since you went for listing,
yes.
Averaging about 388 million when you started off. Now it's about over 500 million.
Yes.
So that means that your revenue, the way you get money is actually increasing year on year. But your PAT, or profit after tax, has been mixed.
Yes.
Averaging between 72 million ringgit to now 86, 87 million ringgit.
Indeed.
Does this mean that there's an issue with cost management, at least in the past few years?
Well, no, yes and no. It's a combination of various things. If you're looking at this year, for example, it has been a challenging year for us. In our general insurance business, as you quite rightly pointed out, we've been growing from about 300 million to just above 400 million just for the general insurance side. And although we were limiting the size of our motor business and portfolio to about roughly 35–40%, in recent years we have increased that portion, and particularly in a certain sector of motor, which is the franchise motor business. Then we go with the dealers and we become one of the insurance partners. And what's happened this year, in line with the industry, there has been an increase in claims. And because of this, the large number of claims, we got hit in two areas. One, in terms of the numbers, also in terms of the rising cost of repairs in our country. So we've had a much larger amount of claims, particularly in motor, for this year. So that's hit our numbers a little bit this year.
Does this mean that actually the motor claim business is self-correcting itself for this year? People have been under-claiming for the previous years. Now you're realizing some sort of clarity?
I don't think that's the case.
Okay.
I don't think that's the case. I think the claims have been relatively high in overall anyway. But this year it has been exceptionally high, particularly high.
It's like a one-off thing.
I don't know whether it's going to be one-off. We hope it's going to be one-off. Yes.
There was also some talk, at least in the middle of this year, around July, August, where insurance providers like yourselves would find the motor liberation laws would be a little bit convoluted or mixed in terms of how it will impact your business. Now it's towards the end of the year. Are you seeing the laws a little bit more clear into how it impacts your motor insurance business? It's
still a little early. 6 months is still early. We reckon it will be at least a year or two before we can see the full impact of this relaxation of the tariff regime. And as you know, it's only a measured liberalization, an increment of 10 plus or minus 10% of the tariff premium price. So I think the indications are that we will probably see a dip in the numerical value of premiums for motor. We are seeing roughly, for ourselves anyway, around about a 5% drop in our premiums for motor. So moving forward, I believe, I think it depends on the market really. And I think it may mean that the market might take a dip first before it corrects itself to reflect the true market requirement for the premiums for motor.
With this in mind, your ROE or your return on earnings have been declining year on year from around 18% to now 16%.
Yeah.
Does this worry your shareholders?
Well, I wouldn't know, because I presume they do. It would be worrying. But I think they understand the circumstances. The general insurance industry is always like that. We are in the business where we can be hit by unexpected events. this time of the year, we are a bit concerned about the floods that we are experiencing in this country.
Of course.
So there may be some large amount of claims in there too. And this doesn't happen just this year. That's quite a regular thing. So we are in this industry. But I think where we are different, as I said, is we do have that travel portion, which represents a third of our top line business. But in terms of bottom line, it contributes to roughly about between 65 to 75%, depending on which region. So that provides a nice cushion, which makes us a little bit unique from our peers in the industry. The decline in our return on ROE is something which we feel is going to be temporary, whilst we continue to invest in getting the right technology to really take advantage of this digital journey that we're going on board. And also we're investing on people. We're now trying to bring about the right teams in our organization. And as you know, we've been announcing quite a new lineup of people.
Mostly executives, actually, top-line individuals.
Exactly.
Yeah.
So we have finally found a replacement for our internal group actuary. Koh Kee Ing comes from Hong Kong. His experience has been abroad. He's a Malaysian, but his working experience has been abroad. So he comes back with a wealth of actuarial knowledge as well as overseas experience, which we are looking very forward to him building a very formidable actuarial team within our organization. Secondly, we have also recruited a new CEO for our general insurance business here in Malaysia, and she brings to us, this Koo Eileen, by the way, from Prudential, and she brings a wealth of experience in bringing affinity partnerships business to us. So she will help us drive one of our pillars to amass the critical mass acquisition of customers using digital technology.
All right. We'll take a short break, but when we come back, we'll take a look into 2018 and what it has in store for the insurance business. Don't go anywhere. Welcome back to Market Talk. I'm your host, Ibrahim Sani. Today I have with me the Group CEO of Insuretech, Razman Hafiz Abu Zarim. Razman, the first time I met you was in my previous life in a radio station, I think about 2 or 3 years ago. At that time, it was critical for us to discuss about the underinsured aspect of the country. Today, 3 years down the road, 2 years down the road, Malaysia is still underinsured. In fact, according to your PR guy, 90% of Malaysians are still underinsured according to PIAM. I'm inclined to believe this number actually. And what's going on here? Why are Malaysians shying away from insurance products? It has been here for the longest of time. I mean, I'm talking about insurance business. Why is it that Malaysians are still not receptive towards taking up insurance products?
Well, I don't really have the answer to that exactly, but indications are that perhaps the majority of us still don't believe in having protection for mishaps in our lives. So I think it's the awareness, and the awareness for the need for insurance. I think the traditional distribution channels, our agency force, have been doing a great job so far, but they can only go so far, I guess, given the penetration rates. So this is where we just have to come in, that perhaps driving the awareness on the need for insurance, and also simultaneously offering products that are simple to understand. Because the other factor that we understand that contributed to this low penetration rate is the lack of clarity about what they're buying.
And this is, sorry, I have to cut you in, because the agency business has done so far, and this is the result that we're seeing.
Yes.
Does this mean that the agency model of selling insurance to consumers is actually not effective, and perhaps we should look at more direct method of reaching out to the consumers? Your biggest competitor, Etika, is doing it right now, directly putting it up front you are doing it right now to a certain extent, at least for travel insurance, right now, up front. Here's what you get, here's what you don't get.
Yes.
Click buy or don't buy, up to you. And of course, a few weeks ago, I just interviewed Jirnexu, a fintech company that has just been approved by Bank Negara to actually sell insurance product right up to the consumers. Consumers can now select, deselect, anything they want. It's like choosing, a Facebook account, I suppose, who would like to, to see your post.
Yes.
Will this help in terms of consumers trying to understand better in getting protection from insurance companies?
Yes, but before I answer that, can I just say, the traditional distribution channels have done a terrific job, and I don't think it's limit up.
Yeah.
I think they'll still have a big role because there are still very complex insurance products which require face-to-face opportunities to sell and so on. I think technology here will help enhance the penetration rate, I believe. Not just directly going to consumer, but also our traditional distribution channels, the agency force. Our agency force, for example, in Insuretech, are adopting technology now to better service their customers. And we help our agency force by offering them tools, technology tools, to help them ease their administrative burden so that they can actually spend more time what they should be doing, acquiring new businesses. So yes, using technology not just to go direct to the consumer, but also to help our traditional distribution channels do their business better as well.
So you're not, in lack of a better word, abandoning them with this
most definitely not.
insurance tech
No, we're doing it simultaneously. We recognize they have a role to play, and we recognize that, yes, technology will help them. So we will use that technology to offer them the tools to help them improve their business as well.
And of course, Insuretech is not just in this country, it's everywhere in this region as well. What is the level of contribution from other countries? Is it as per your expectations, or can you do more in contribution, say, from, I don't know, other countries in Southeast Asia?
Sure. Yes, the answer is yes. As you know, our travel insurance is our partnership with our airline partners. Currently, we have 4. Air Asia, Air Arabia, Cebu Pacific, and recently Angkor Air in Cambodia. So they fly, well, literally all over the world. And so we look forward to expanding our distribution reach with them. And the present contribution is roughly 50% in this region, and the rest of the world contributing about 50%. But we see that growing.
Okay, with 2018 dawning upon us, and we've discussed a lot about your performance for this year, what you can expect for next year, what would be the key challenges that you need to overcome, particularly when 2018 is upon us and you have a very tough fight in terms of the insurance market with the other insurance providers? Sure. What would be the 2 or 3 things that you really need to keep an eye out for?
Well, let me hit firstly our travel insurance product. We have barely introduce what we want to introduce to the market.
Wow.
We've been working on, as you get, gathering data and mining the data to be able to offer our future customers more personalized travel products. So it's not one size fits all. So we're going to apply dynamic pricing technology as a result of analytical work. We are already introducing some form of dynamic pricing at the moment. As you know, in most markets now, the regulators have insisted that for consumers to buy ancillary products, including insurance, they have to opt in rather than those products being pre-ticked for them. So this offers a challenge to us to make it more attractive and so on. So we've been embarking on a program to be able to offer dynamic pricing, more personalized pricing to the right type of traveler in the future. You'll probably see the benefits are more relevant to you, and you'll be more likely to be wanting to have that protection.
Would regulations be a worry for you?
No, it's been there all the time. I mean, this is something not unanticipated. As you know, in a more developed economies, this is the direction that everybody is going, which I believe is a positive direction for the consumer. And so we will be what we've done in the last couple of years, even before the changes in this regulatory landscape, was to see how we can offer more personalized pricing. So we are hopeful that 2018 will be the year that we can see the introduction of these products to our customers, and hopefully that will be showing a better growth for us.
We're looking forward for the new products to be rolled out. Razman, thanks for joining me for Market Talk. That's all the time we have for Razman Hafiz Abu Zarim, the Group CEO of Insuretech Group. That wraps up this episode of Market Talk. Be sure to follow us on Facebook, Twitter and Instagram at 501awani. Don't forget to download our app on the Google Play and the Apple App Store. And as well as you can watch this interview on all the platforms you get on your screen. You can also listen to this interview on the podcast as well. Just simply search for Market Talk wherever you get your podcasts. I'm Ibrahim Sani. Thanks for watching and goodbye.